Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Investor. So as we all know, today is Tuesday. We have this session every Tuesday at 4 p.m., where we basically look at what's happening in the markets, trying to understand the key price levels and also key developments in the markets. So this is a weekly webinar. So it happens every Tuesday. So the next episode will be on Tuesday next week. So I'd like to introduce you another series that we started this week. And this is called Market Snapshots. It's happening every morning at 11 a.m. So on this particular series, we basically cover what happened yesterday, what we are looking to expect today, and also key price levels today. So it's a rather short term, but also a very quick update to get you started in the financial markets, especially during the London event. So as for now, I would like to begin right away. So let's start with the information. So if you can hear me clearly, you can just type hi in the live event section. And these will confirm that everything is working just fine. So among the key highlights for the day, we know there is a lot of stuff happening in the markets. One is a speech from Federal Reserve Bank of the US member Bostic. This was last night. It's quite significant, and it's creating a lot of expectations on tonight's meeting, where we'll be focusing on a speech from Fed Chair Jerome Powell. So at the same time, we have the issue of earthquakes happening in Turkey. Sadly, a lot of people have lost their lives between yesterday and today. And also it has an angle as well, where one of the main export ports for Turkish oil was briefly closed yesterday, rather reopened today. Also, we have some commentary from Fed's member Kashkari. And at the same time, we have some more news coming up. So we will be covering this in today's session, but at the same time, looking at the markets and what is major markets and the key price levels. So the chart that we are looking at right now is the chart of UK oil, or hot oil Brent oil, which is largely accepted as a benchmark for global oil prices. So clearly, you can see that it has been on a bearish momentum, and this is on the 1 hour chart. So for the last about 8 days, oil has been moving further down. So last week, we know that we had quite a number of news influencing financial markets. One of them, really highlight this was the non-farm payrolls data Friday last week. So before this, we had the ECB press conference and ECB interest rate data, Bank of England interest rate data, and also we had the FOMC press conference on Wednesday. So all these affected or influenced the markets. So the markets kept going down before bottoming at a price of $1 per barrel before changing direction yesterday in the evening. Today, we continue with the bullish momentum before we go to this resistance, and it seems like the price has changed direction. And now there's a chance that we're seeing this price back to yesterday's low. If price remains in this pattern, that is the bearish channel that has been holding since the 25th of January. However, it's not an issue if the markets were to actually break the $82.5 level, then continue further upwards, especially considering the set of new economic developments that we have seen in the study of the oil markets. So there's quite a number of factors that are currently influencing the oil markets. One is a very strong positive outlook in China. China being the major importer of oil globally. Whenever the economy is doing well and the industry is vibrant, then these basically drives oil demand higher, which eventually drives prices higher. So there could be a lot of optimism driving oil prices higher. As you can see, since the beginning of this week, it's an attempt to reverse last week's momentum, and this particular momentum continues. So you have to be aware of that. So if I was to zoom out my chart here, you notice that overall oil prices were majorly bearish last year, besides the first couple of months at the beginning of the year. Then upon starting this year, you can already see the major sequences we have had. So one, the market, creating a new channel on the 4-hour chart that is slightly bullish, with some major swings starting from December, then back down towards the end of the year. Then on the first couple of weeks on January, a very strong momentum, and then a pullback, and now we get to February. This being the past week. Remember, February started last week, but was the month. So this new month is basically showing some signs of later. So there is a good chance that we'll be seeing some further upside in this one. So a key price level to watch will be $82.5. So $82.5 seems to be an important price level here. So if the market happens to break this, then we go up. But the current price action is clearly indicating that there's a good chance of moving further back downwards within a target of $79. And this would be almost $3 from the current price. So that's the oil outlook. As we proceed, if you have any questions or commentary, feel free to type that in the live comment section, and I'll be responding to that as we continue the session. So once you join, kindly say hi, write some of your feedback to confirm that the volume or the voice is clear enough, and then we proceed with the same. So let's get to the next part of today's presentation. So one, rises China outlook. Try and share a very important article here. So this is an article from Reuters. So oil prices rose for a second straight session on Tuesday, driven by optimism about recovering demand in China and concerns over supply shortages following the shutdown of major export terminal after an earthquake. So I'd like to bring it to the attention that after the earthquake yesterday was out of a disruption in Turkey, leading to declaration of sorry, apologies for this, a declaration of a state of emergency for quake hit regions. So up to 10 provinces in China under state of emergency. So besides these, one of the major oil export terminals in China was closed down out of fears that there could be damages. And as a result of these, we saw optimism in oil prices. So there was a very strong rally happening in oil prices. However, later on, the export terminal was set back on, and this would explain why we are seeing this. Remember, it happened within the last 3 hours. So within the last 3 hours, we already see that the strong bullish momentum came to an end, and now we are seeing some form of reversal happening in oil prices. So that could be one of the factors influencing them. So besides this, there's more stuff happening in the markets. So Rufas Bostic, one of the Fed members, had a speech yesterday, or basically an interview. So what he basically mentioned is that it doesn't really change my outlook at all. And this is in reference to the job market data that came on Friday last week. So non-farm payrolls added 223 jobs. This was in December within a comparison of 200,000. So in yesterday's interview, he basically mentioned that he expects the interest rates in the US to continue rising above 5% and then keep them there, maintain a restrictive policy that would put pressure on inflation to come back down as the Fed target 2%. So at the same time, there was also a commentary from Fed's Kashkari. In his speech, he basically mentioned that he's expecting interest rates to move up to 5.4%. So this means continuing to raise rates, as he sees a likelihood that the Fed's benchmark borrowing rate should rise to 5.4% from its current target of between 4.5% and 4.75%. So, quote unquote, we have a job to do. We know what raising rates can put. We know that raising rates can put a lid on inflation. So we need to raise rates aggressively to put a ceiling on inflation, then let monetary policy back its faith. So these are commentaries to Fed members, and the most important one that a lot of investors are looking forward to will be happening later tonight, and this will be at around 8 p.m. So from 8 p.m., the Fed Chair, Jerome Powell, will be issuing a speech, and this is during a moderated discussion at the Economic Club of Washington, D.C. So in this particular event, investors are expecting clarification following a very big number that happened last week on Friday, and this was the jobs report. So as you can see, the big discrepancy here. The market was expecting that the U.S. economy would get 103K jobs in January, but the actual report was more than double at 517,000 jobs. So this was a big surprise in the markets. And if you look clearly closer to the data, you'd also note that the average hourly earnings for the wage rate increased by 0.3%. It's a slight slowdown from the previous month of December, where wage rate had grown by 0.4%, but so apologies for that. I lost my connection for a moment. Now I'm back. So let's continue with the same. Awesome. So from what we are seeing with the Fed, as I already mentioned, biggest news that we're expecting for the day is the speech from Jay Powell. Remember, this will be happening at 8 p.m. So the key expectation here is that the Fed chair clarifies the monetary policy outlook for this quarter. So remember, in the last meeting, they hiked interest rates by 25 basis points, which was the smallest hike since this round of hiking started in March last year. So if you can compare here, you can see that the US Federal Reserve has been the most aggressive central bank among the top economies that we normally trade in Forex. So with the US raising interest rates 4.75%, it's slightly above Canada, which decided to stop at 4.5%. New Zealand is still at 4.25%, and the UK is 4.5% last week. And then this morning, the Australian economy went to 3.35% from 3.1%. Last week, Eurozone went 0.5% to 3%. Switzerland 1%, and Japan still maintains a negative interest rate of 0.2%. So with the US Fed being the most aggressive central bank in hiking rates, then it's making their bond market very promising and basically creating a flow of liquidity from areas where bonds are considered to be risky to the US economy where the bonds are considered to be much safer. So in this case, this migration is creating a very strong demand for the dollar. And as a result, we have seen the dollar index make a very strong recovery from last week. So this was Thursday last week, followed by Friday during the NFP. Yesterday, some further upside, pulled back down, and then today you can see the continued momentum up. So this strong recovery in the dollar has caused a lot of shift in a lot of markets. So some of the markets we have seen a big change happening is AUDUSD, where the dollar strengthened, went to the lower trend line here, formed a breakout. You can see a long trend line that has been extending here from October last year. So from here, you can see the breakout that happened. And then today, after the announcement of interest rate in Australia and this morning, the Australian dollar strengthened due to the 25 basis point hike. But then the US dollar bulls continued buying the dollar. And now we can see it was a successful retest. Then the trend continues. So from the current price action, it indicates a retention of higher prices at exactly yesterday's high. And now we see the entire reversal of the RMA move. So there's a good chance we'll be seeing AUDUSD drop back to 0.68556, which was the low yesterday. So from the economic calendar, I'll take a quick view just to show you what's happening here. So I'm looking at early morning. Sorry, I shifted the wrong week. So this was the news in the early morning. We saw a shift from 3.1% to 3.35%, which is some further tightening from the Reserve Bank of Australia. So as a result of this, what we saw in the markets was a very strong recovery here in Australian dollar following last week's weaknesses. But now, after a successful retest of this area in yesterday's high, now the price action is indicating that the market is back down. So there is a good chance we'll be seeing the market go back down to the previous low of 0.68556. So from the forward chart, this is the support line. And as you can see, it has been extending since around 14th of October last year. So a very strong support level having been broken and now being retested is a good chance we'll be seeing some further downside. So one key thing to consider today is the Fed chair meeting. So if it comes out as hawkish, that is looking to expand monetary tightening, increase the number of basis points that they are hiking in the next meeting, then in this case, we'll be seeing some further downside and a very strong breakout proceeding from this retest. So it's a very interesting price level, especially for our AUDUSD traders. So as we progress, if you have any questions or commentary, feel free to type that in the live comment section, and I'll be responding to that. So, hello, Jack. Hello, Michael. Nice to have you here. Thank you also for your responses. Let's keep this going. So, besides that, let's look at one more market. In this case, I mentioned the issue of Brent. So, there is that. So we have covered Brent, we've covered AUDUSD. Now let us look at gold. So following last week's events with the aggressive rate hike at 25 basis point, and now we are looking at potentially another one in this quarter, that is between February and March. Then we saw gold weakening against the dollar, despite starting the year on a very strong year and running. So now what we are observing in the chart is the potential for a flag. So after this sharp drop, which basically represents an inverted flagpole, now a flag is forming here. So all you have to do is monitor these highs as well as these lows, so that you can see price action direction in gold. So if you happen to break any of these two trend lines, then you have a direction of where gold is headed next. So a breakup is bullish, breakdown is bearish. We all know these are simple stuff. So for Euro USD, we all know it was on a very strong momentum, extending from all the way back in September last year. And then at some point, trading sideways. You can see the weekly range, either going up or down. Last week, early in the week, there was a very strong momentum upwards, where the euro was strengthening against the dollar before the reversal of Thursday and Friday. And now, this week, you can see from Monday yesterday, a very sharp attempt at recovery, then a break to that level. And now we can already see the price action playing itself here. So this was acting as a major resistance level. And once broken, the price started trading above the yellow area, then it became support. So when prices were going down, you can see managed to hold where as support. The market retested, and then it's breaking downwards, getting some further weakness against the dollar. So we will be expecting some further downside here. So as we all know, these sessions are not financial advice. They are always very educative to help you get the information, understand your key price levels as a fundamental. So next asset, we have seen the dollar index and the pullback here. So we also look at the USD JPY. So from a daily perspective, you can already see last year was a very strong momentum trade as a result of the divergence between the two monetary policies, that is the Fed and the Bank of Japan. So towards the end of the year, we saw a very strong intervention in October by the Bank of Japan, and the intervention led to the last fees as well as the profit taking fees. And now, in the new year, we are seeing a completely new narrative. So we began with some downside momentum, and now we are seeing the market trading like a triangle. So from here, I would like to show you what was happening here. So this was a massive triangle that lasted a couple of weeks, I would say 3-4 weeks, where the market made a swing down, up, down, up, down. Clearly, the overall direction was sideways. So there was a slight break towards the lower side, and then a break towards the upper side. And now it's clear we are off this particular chart. So the book pattern has already been broken. So there is a good chance that we'll be seeing some further upside happening in USD JPY as the US dollar recovers its strength. So last week was very strong on Friday. We opened with a gap which was not closed. The market went back and then up, closed here. Then attempt to move further downwards. And now we are seeing some recovery happening here. So there is a good chance that we'll be seeing some other upside happening in USD JPY, considering the strong break outside this particular pattern. So if this particular trend continues, then some key price levels might be on first, this high here. So notice that this particular high was the highest trading price in January, 134.682. So it might be a nice target if the market continues to push even higher. But then we always price in a potential retest. So sometimes the market will go back to retest the breakout area. So this seems like a key level. So 130 also very psychological. So 130 price level is around here. So I would say this was a breakout area, and now if the market decides to push further downwards, then this would be a nice target, 130.0, 134.68 on the upper side. So it's all about waiting for Jerome Powell and see the direction of the speech. So for the food side, very interesting that one of the top indices in the world, remember, this is the index, benchmark index that represents the stock market UK. So it's currently a very strong bullish momentum towards an all-time high. It begs the question, are the stocks not healthy right now that they are breaking an all-time high? So is it true that the UK stocks could be potentially very expensive, and this could be the basis of a potential short selling trade? So this is one theory I've been thinking about for quite a period now, and it happens to be playing out quite well. So as you can see, after the bullish momentum that lasted the entire December and January, we went for a two-week consolidation before the market broke to the upper side, retested, and then continued higher. So the breakout is right here. Then the breakout, retest of the same, the trend line, then a continuation of the here. But then since we closed to this particular high last week, you can see on Monday, started with a strong bearish momentum, indicating a reversal, and then today some other upside. So if the market was to fail, break this level and get previous high of 79.10, then there's a good chance that we'll be looking for short selling positions. So one idea that is already developing is that the market will enter another flag, just like the previous one here. And it's all a matter of observing the price action within the flag, looking for the next set of breakout. So as for now, it may make sense to look for price action, let's say around this area here. So if the market remains within a triangle, such as this one, then the idea is to look for a breakout. So still not very solid or very convincing of some further upside momentum. In my opinion, this is a stable of a port, so we might be looking for short selling positions. When they appear, then how to execute that. So pound yen majorly sideways, nothing much happening here. So I'm not majorly optimistic about that. So as for the pound USD, we know that the Fed has shown signs that it's extremely aggressive with tightening, but at the same time, there was a very strong bullish momentum that eventually ended up in a double top pattern. So you can already see the M-shaped pattern here. So you don't need to talk about this. If you've been following this, then you this particular pattern. So the M-shaped pattern, or what we basically call the double top pattern, is a very interesting pattern because sometimes it can give you some very good entry points and also some very good swings. So after here, you can see that the market was unable to break this resistance for roughly 3 weeks. So from the 4-hour chart, there's this, and this. So 3 weeks unable to break this resistance, then eventually breaking the support and moving down lower. So there doesn't seem to be any support holding the prices here. So this particular low here that we saw at the beginning of January would be the next target of USD, and this is good. So eventually a target of 1.185 would be the target for pound USD. So from the 1-hour chart, you can see the increased momentum for the downwards. So if J. Powell retains this evening fuels the dollar to even strength, then this would be a realistic target. So US30 trading in a triangle, and this is easily observable. So excuse the noise in my chart. So you can see the first swing here, and I'll give you a date. This is the 13th of December last year. And also the bottom here, this is on 20th of December, December last year. So since we saw this swing, the market has maintained within those two limits. But this area again swung up and hit a high here. This was 13th of January, then further back down and bounced around this area. This was the 20th of January, then all the way back up. And once you go to the trend line, we saw some very strong predictions, and this can be easily identified through the strong upward tails here or wicks. So since then, we can see the market moved further back downwards. So this week, the attempt to go up, this was yesterday, was met with very strong selling momentum. So we are expecting that the prices will maintain the same pattern and keep pushing further back downwards. So remember, target is around this trend line as long as the pattern remains. So we could be seeing the price move further down and get to the lower trend line. The price level here is around 33,326. So we could be seeing the Dow Jones move further back downwards, 33,326, and these would be pretty interesting. So on the counter, you know that the market could always go back and retest this area, but the overall theory is that we're headed further back down at this level here. So still checking to see if there's any questions. Mrs. Courier, hoping it's not a politician. Hi, and welcome to the session. What is the best market entry technique? I don't know if there's a best. Many people use different strategies that they work for them. I haven't explored all the strategies that there is, so I wouldn't say that this is the premium, but I have not exhausted my data. So if I was to recommend to you and tell you that this is the best without having explored the options, then I would be lying to you. However, in my opinion, with my experience, I tend to consider price action as a very key concept when you are going for a market entry. So market entry, basically reading the price action and looking for the right levels. So for instance, just to highlight, we had discussed a potential entry here in UK oil. So at the beginning of the week, and this was yesterday, we opened with a gap, we tested the area here, and I thought that this was a premium area to go for a buy trade. So I went for a buy trade here, then set a stop loss just below. But what happens is that the market went up for a while, and then towards the afternoon, jumped all the way down and kicked me out. But then after kicking me out, the next candlestick was strongly green, indicating that I wasn't wrong. And then I went for another buy trade. Right after kicking me out, I went for another one here. And this one happened, the right one. And I was able to ride this momentum. This area was this particular high here of the 100 day. So yes, my analysis and everything was right here, but the market proved me wrong. So it doesn't mean that I was wrong. Sometimes you'll have acceptable losses in your trading plan, and you have to be okay with that. So I wouldn't say there's a premium. There is no way of telling that the market will always bounce here. Sometimes you go for a short selling trade and the market breaks. So it's all about repetition and repeating the right trading ideas over and over again. So as long as the winning strategy, you will have more winnings than losses, and that's what matters. So checking on the other comment, the weekend market gap on USD, what is your view on it? I wouldn't say that gaps always close. Sometimes they don't. So for me personally, I'm looking at key things happening in markets. So one of the key developments I've seen earlier this morning, I'll try to share this, is that we are seeing the Bank of Japan achieving some of its goals. So last month, we saw Japan hitting a good level of inflation of 4%, something they have not seen in decades. And this is a huge success for them, following the massive QE that they have been doing within the economy. And now, early this morning at 2:30 a.m., we saw the average cash earnings year over year rise to 4.8%, compared to an expectation of 2.5% and a previous reading of 1.9%. So the Bank of Japan in the previous meeting basically mentioned that it wants to see signs or evidence of a continued rise in prices. So as long as cash earnings or incomes continue rising, then inflation will be sustained and will continue rising. And these will eventually force the Bank of Japan pivot and start hiking interest rates. So hiking interest rates will be the first that will start strengthening the Japanese yen. So in this case, what we are seeing here for the graph, this one is one of the biggest spikes that we have seen in a long period of time. So notice this number has not been seen all the way back even to 7. So this is a big spike in average cash earnings. And if they keep on growing like this, then the Bank of Japan will have achieved its target. It will start considering reduce QE to 0 and then pave way for interest rate hikes. So when investors understand this and they are looking forward to trade this the same way. So when you go back to USD yen, you can already see that yes, there was a big reversal here. And now that the US dollar is strengthening, trading forwards, at some point, the Fed will stop hiking interest rates, somewhere maybe around 5.4%. Once this happens, then the trading will be back downwards. So as for now, there's a good chance that Powell fuel the dollar to even more strength. But then if he happens to be a little bit dovish on the markets, then the idea is that the market closes the gap. So if Powell comes in and from his speech, he mentions that he will still continue the same policy of slowing the rate hikes, maybe to 5 basis points or even 0, then the first immediate target USD it will be one of the easiest trades. So that's it for today. Thank you guys. Thank you for your time and also for your questions. I hope that you enjoy the rest of the day. Just confirming to make sure that I did not miss a thing. Yeah, that's pretty much it. This week is not packed with a lot of stuff. So some of the stuff that we're expecting have already happened. So things to know in the markets this week is that one, we're expecting a speech from Powell later in the day. The other thing is that Canadian jobs will be here on Friday. So we'll be waiting for that. I believe it will be very violent for Canadian dollar traders. Then what else do we expect? So on Thursday, there will be monetary policy report hearings for the UK. So this potentially the UK pound. So jobs data remained the same in Switzerland at 1.9% earlier today. Hotels. So in the stock market, we know that there's a lot of earnings happening this week. Some of the key highlights include Tyson Foods, Unilever in the UK, British Petroleum yesterday, DuPont, we have Uber, Dahama, Simon Property Group, we have Tech Interactive, Chipotle Mexican Grill, Walt Disney, CMA Group, CVS Health, Young Brands, PayPal, AbbVie, AstraZeneca, Crowdflare, Kellogg, Tora, Pepsi, Rift, Philip Morris, and VeriSign. Those are some of the key highlights that we're expecting to see in the earnings. So if you are in the stock market trading, then that might be one of the key things to consider. So last point, I don't know if this is helpful, but it's important that you know. Gautam Adani, this is one of the top world billionaires. So 2 weeks ago, he was the 4th richest person in the world. And this was way above the likes of Bill Gates and Warren Buffett. So he had a personal fortune, an estimated $120 billion. So Hindenburg Research, an American short seller with bets against Adani's enterprises, accused him of putting off the greatest scam in history with accusations around stock manipulation as well as fraud. So this caused a lot of panic in markets, and people are dumping this stock. So as a result, we saw the Adani groups of companies raise roughly $110 billion, and this has been one of the top stories for them. So yesterday, we saw some recovery in some of the Adani group of company stocks. So we will be following more on this. So perhaps once you join the session tomorrow at 11 a.m., remember you always go to YouTube, search FX Pesa, and then the market snapshot at 11 a.m. Then we'll be discussing more of the same. So thank you very much, guys, and I hope to see you on the next session.